Hello everybody. I'm hoping that you all had a great long weekend and you are rested well enough. Welcome to this week's edition of our weekly forecast for the 12th to the 16th of August, which is the upcoming week. Aspects covered in this review include evaluating and looking at how price has moved recently on multiple assets, as well as highlighting potential trading areas, management point areas, and target areas to be aware of in the coming week. In this review, I'm going to cover up on dollar, EURUSD, the precious metal, NZDUSD, NZDJPY, EURJPY, and finally AUDUSD. Now, as you all know by now, our main analysis is based on what the dollar is doing, and I've got the dollar open on the chart. We can clearly see from December of 2007, up until previous month, which is July, dollar has been in a bullish bias. But now, up until the high of July, we can clearly see that dollar has hit a point that we refer to as a pivot point. Dollar has reached a pivot point, and from last week I highlighted that I expect some weakness on dollar. Yes, we had the trading of last week and it moved massively to the downside. Dollar experienced some weakness as predicted last week. Now, as you can see on the chart, this is a monthly chart, guys, so take note, we are on a monthly chart. As you can see on the chart, this month has opened bearish, right? Last month was a strong bullish after a small correction in the market to the downside. So last month engulfed the previous 2 months and paused on the pivot point. So I'm expecting this current month to continue with its downwards momentum, meaning I'm expecting more weakness in the dollar. More weakness is coming to the dollar for the next foreseeable 2-3 months. We are going to get more dollar weakness. Now, on the monthly chart, we've got this point to highlight. Right, we need to highlight this point here. This is our monthly resistance, right? This area is our monthly support. Now, I'm going to go to a lower time frame. Okay, I need to highlight those points again. Let me use the trend line. So we've got our monthly resistance there, and then we have our monthly support down there. Now I'm going to go to a lower time frame from the monthly, which is weekly. Remember guys, our analysis, we always start with a higher time frame bias and we dig down to a lower time frame. So now I'm on a weekly chart on the dollar index. Now take note of this guy. There was a clear rejection of price on the 98.40 price zone. There was a clear rejection of higher prices. Price couldn't push further up, so there was a clear rejection, meaning weakness into the dollar. This high didn't really test it, but it was still in the same zone, and we had weakness following in the 1, 2, 3, 4 weeks that followed after. Now you can see what I always emphasize to say, the left side of your chart has got a lot of information that you have to utilize. Why would we get such kind of rejection here on this price zone? Because of this supply in the market. This supply zone is holding the prices from pushing further up. So now price reaches that zone, tumbles. Price reaches that zone, tumbles, right? It's not a coincidence. It's there on the chart for you to read and be in a position to make a decision on how you are going to trade that asset. So this supply zone here is holding up prices from pushing further to the upside. So you would expect bearish evidence in the market around the 98 price zones, right? That's where you look for shorts on your dollar. So practically we can say dollar is turning bearish at this moment in time. Dollar is turning bearish, so we can say a short-term bearish turn on the dollar. This was expected. The market was expecting this to happen, so we're gonna see further weakness in the dollar in the coming week. So now I'm going to go to a daily time frame. Now you can see much clearer now what the rejection looks like from the 98 price zone. Now on the daily chart, remember the black line that I've drawn, this line here represents our monthly resistance. This one represents our monthly support. So now price is almost approaching the middle point of that zone. You can see from here up until we've got about let's say 330 pips. So I would expect price from the upside to have a bit of a pause, like around this area. You see, that's where the market opened with a gap. That's like the 50% of the range, the monthly resistance and the monthly support. So now with the concept that we use in the mentorship, the guys in the mentorship right now, you should know already what's happening here. We had a price drop, 1, 2, 3, price drop, and then the bulls tried to push up, but you can clearly see there's no momentum in these bulls here to push further high. So we've got a drop, and then we've got a base. What comes next after? We've got a drop, we've got a base, then we have to drop again, since we are expecting bearish evidence on the dollar from a higher time frame. We are on a daily now, but monthly and weekly dollar is bearish, is turning bearish. So we are expecting further weakness in the dollar. So now, from the concept that we use of our institutional supply and demand, drop, base, and further drop to the downside from a technical point of view. Yes, of course, the fundamentals, they are supporting this notion of having a weaker dollar. So now, from a daily time frame, I'm gonna go to a H4 so that I highlight the prices that you need to take note of. Now, you can clearly see price has formed a base on the H4 time frame. We had a drop, then we've got the base, so now expecting further drop to the downside in the coming week. Yes, market can push high, but that's only if it closes above these two equal highs. You see those two equal highs? I'm going to highlight them. We've got these two equal highs, and then we've got this low here. If you remember correctly, in the mentorship group, we highlighted, we had a discussion about this guy here. That was a demand zone created in the market on a lower time frame. That's a short demand area. So price started bouncing up and down, up and down. Supply zone, short time frame supply zone created there. So now price is bouncing up in the 4-hour time frame. There's like a channel which has formed there. We've got this channel here. So now you need to take note of 97.60 as a potential area to short the market, and then you need to take note of the 97.20 price zone for potential break to the downside. You see, so if prices close below 97.20, that definitely means now we are resuming this bearish move to the downside is now gonna continue. So 97.20, if dollar closes below that price area with a strong momentum to the downside, then shorts are advisable to take. Now, if it does break to the downside, where is dollar heading? Now you need to, this is now an advanced topic, you need to measure this drop here, which is 141 pips. Now if we break below 97.20, I'm gonna do a rough estimate, guys. If we break below 97.20, then we get 140. Yeah, so price is targeting the 95 zone, the 95 price zone, 95.80, 95.96. You see, the next drop in dollar is heading to 96, 95, 80 zones. You see, so that's how much I'm expecting weakness on the dollar index currently, but only if it closes below the 97.20. But if price doesn't close, then you look for a short-term bullish momentum up until 97.60. 97.60, you look for short-term bearish evidence to the downside. So now I'm gonna go to a H1 chart. Now you can clearly see now the supply zone and demand zone that I've mentioned. You see there, there's a potential area for shorts, and then you see here there's a potential area for long positions to the upside. A reason being of this demand area, that was demand zone that was created here, this demand here, price pushed higher, price dropped, came back into this supply here, then price dropped. Yes, some people are gonna say, but those are small moves. That's not, guys. These are moves that can grow your equity. That's 24 pips. You see, these are moves that can grow your equity. But now the move that we are really aiming for on dollar should give us in excess of about 100 to 130 pips. But patience is gonna be very important, guys, because you need to get in at the right time. Like where price is now, which is 97.36, there's nothing that you have to do on the dollar. There's nothing. You need to wait for either 97.60 or 97.20 price zone. So you can see now, the more you go to a lower time frame, the more you dig down to a lower time frame, it makes more sense. You see, so you have to start on a monthly. You highlight your monthly support, your monthly resistance, then you go to a weekly, then you read what the chart is telling you, what price is telling you. We've got clear rejection there on the dollar. The previous week, last week of July, there was a clear rejection from the 98.40. Then you go down to a daily time frame, then you see clearly now what's going on. You see, you already know the price action, already know the bias from the higher time frame, the monthly and the weekly, and then you can see daily is dropping. So all in all, dollar, we are looking for something like this here. Drop, we have this base and further drop. So we're expecting drop, base, drop. I've already highlighted the price that you need to take note of. All right, so that's much about it with regarding dollar index. So now we are going to look at EURUSD. By default, it's the normal, guys. We then go to EURUSD. All right, since we are strong bearish on DXY, which is dollar, the opposite is going to apply on Euro US dollar. I'm on a monthly chart on Euro US dollar, and you can see where price opened this month. That's an area of strong bullish evidence, and after the open of this month, price rallied. You see, Euro USD, the first 12 days of August, Euro USD has rallied already 225 pips. in a weeks of trading, EURUSD has moved more than 200 pips. So now I've highlighted my monthly support, right? Now we've got a monthly resistance here. This is a monthly resistance. Right, let me remove my these numbers here so that you can see clearly the chart. Right, so now I've highlighted my monthly resistance. EURUSD monthly resistance has been highlighted. You've got the opening price there. You've got a demand that engulfed all the supplies there. We've got monthly support here. See, then we've got monthly resistance here, monthly resistance. We've got monthly resistance here. You can clearly see. You can clearly see that this area is a monthly resistance that turned into support on this candle here. So now we've highlighted our areas of interest from the monthly chart. So we can basically see EURUSD is bullish. We hit our monthly support, price bounced to the upside. So we are in a bullish bias on EURUSD. Now we go to a weekly chart. Now you can clearly see we had a rejection last week. The previous 2 weeks, that's the week of 29 to 2 August, there was a clear rejection in the market. This guy here, there was a clear rejection from the $10, and I always emphasize this to the mentorship group. The United States have got a problem if fiber rests at $10 with euro at $10 or below. So it's not a coincidence that there was a rejection at $10 price zone. So now we've highlighted on a weekly chart that we had a rejection of lower prices, and then price rallied last week on EURUSD. So now I'm gonna go to a daily chart, and then you can clearly see what's going on there. Market is now pushing to the upside. We had a clear push from the $10, and I'm sure some of the guys in the mentorship group managed to catch the trades that I called on this pair here. It was one of the great performer in our group from last week. So now we had this price action here, which tells us now there was a breather. Market was taking a breather in the market in its move to the upside. So now, with us anticipating a weaker dollar, then I'm anticipating EURUSD to continue with its uptrend. I'm expecting EURUSD to continue with its uptrend to the upside. So now we are on a I forgot to highlight my weekly resistance and support, so I'm gonna highlight here quickly. That's my weekly support. You can see here it touches, rejects, touches, rejects. That's my weekly support. And then we've got weekly resistance up here, right, and the other one, which is the monthly resistance. So now I'm gonna go to a daily chart. So on EURUSD, I'm expecting price to push further high into $12.60 up here, or even a further push to dollar for 1.1360. You see, I'm expecting price to push all the way there, but it's definitely going to face some resistance around these highs here. So around those highs, I'm expecting EURUSD to face some resistance in its continuation to the upside. So now you need to take note of $10 is now a long stretch to look for bullish evidence, but this price area here, these highs, you see these highs and this low, this high and this low, that's a price area for potential bullish evidence to the upside. So we are talking of 1.160. We're talking of 1.160 as a potential area for you to look for long trades. Remember, we are bearish on DXY, so there's no need for us to take short trades on EURUSD. That's gonna be risky. That's risking our equity for nothing. You see, why would you want to short EURUSD when you are expecting strong dollar weakness? You see, you're expecting weakness in the dollar, then you want to go short on EURUSD. That doesn't make sense. So shorts are a no-go at this moment in time on EURUSD. We are only going to look for longs from price level of 1.1160. That's a very good potential area to go long. Even the current price level, which is $12, the $12 price level, which is the current price level, is also a good area for long trades. You see, mentorship group, I will highlight to you guys our take profit targets and our stop loss targets for these assets that we are discussing here. So $12 is also a good potential area to go long, with a target in mind of 1.1265 or all the way to 1.1360. Those are like potential targets on EURUSD. Now we are going to take a look at gold. Now we've got gold here, and we can clearly see gold is in a strong bullish momentum. We've been talking about this for the past 2-3 months, that gold is bullish, right? Prices are heading higher. Last week I highlighted in the forecast that dollar is gonna hit 1500 sometime the upcoming week, which was last week. And yes, on Tuesday or Wednesday, dollar did reach the 1500 price area. So now we are on a weekly chart. We are on a weekly chart for the precious metal, and price, right, I'm gonna highlight there. Price is now truly way out of our structure where we expected to face some resistance. Gold broke above the 1380 price zone. Let me highlight it here. 1380, right? Gold broke above the 1380 price zone. 1380 is a strong area of resistance, a strong area of supply. So when we had this June trading close above 1380, that in itself was a sign to tell us that, okay, gold is really bullish. From what price area that time? From 1380, bullish evidence. From 1380, bullish evidence on gold. And so now we have had gold push above, and it's trading well, truly above. Where is our next monthly resistance? This supply area here. This is our next monthly resistance on gold. 1596. We can practically say that's the 1600 per ounce price level. It won't surprise me if gold reaches there. That won't be a surprise. But that's not like in the coming week. No, guys. That one is a bit of a stretch. So we are talking of probably September, October. We're talking of 1600 per ounce on gold. So now that I've highlighted my monthly resistance and my monthly resistance up here and my monthly support down here, I'm gonna go on to a weekly. We've already known that gold, we have defined that gold is bullish. Now I go down to a weekly chart so that I can perfect my price zones that I'm looking for. We've got here 1400 is a very good potential area of long positions. 1400 is a good area for long positions, but I still expect price to pull back into the 1450. See the 1450 price zone. Let me highlight the 1450. Right. I expect price to pull back into this zone here. Why? Reason being that was the demand area that was created last week. Price rallied, never looked back from 1450. So I'm expecting price to pull back into 1450, and 1450 now represents a great area for long trades. You see, 1450 now is a very good potential area for market to trade to the upside. I hope you are still with me, guys. Yes, this is gonna take a bit of a long analysis because I want to do this once, and then during the week when I get your questions and everything, you will have much clearer answers to those questions. So I'm trying to explain as much as I can in this review. So please don't get bored, but try to listen exactly to what I'm saying. Yes, it's a weekly review. Things can change in the upcoming week, but you know I always highlight that in the group. If market structure changes, I'll definitely tell you guys, nope, our setup has been violated. We are now looking for this. So that's why I have to explain in detail on the first initial forecast that we'll be following through in the coming week. So now we've got the 1450 price zone. That's the most good potential area to trade to the upside. So now I'm gonna go onto a daily chart to define other areas of interest. Now you can clearly see why I'm saying 1450. This is a daily time frame on gold. Remember, we are bearish on dollar. No need to be bearish on gold. We have to be bullish, because if the dollar is going to get weak, most investors, they look to put their money in gold. So now on a daily chart, you can clearly see there was a rally up. There was a rally here to the upside. Sorry, there was a rally here, market rallied 1450. That's a demand area that was created. Even here there was a rally to the upside. So I'm going to highlight the second rally also as another potential area, but it's a bit risky because price could or may drop down all the way to 1450. So that entry is going to be a bit risky, but it is a good area for long trades. So we've got the 14. Okay, I'm just going to round this to a whole number. What is our next institutional price level here? 1473. 1473. We've got the 1470. We've got the 1470 price zone. That's another potential area for market to push to the upside. So we do expect gold to have a correction a bit, you see, into the 1470 or 1450 price zone before it rallies again. So these are potential areas for you to look for long trades on gold. Right, that's much about it in regards to gold. So now we are going to look for, we're going to analyze what NZUSD is doing. Right, we've got the NZUSD. It has been in a strong bearish momentum since July, 17 July or something like, no, not 17 July, but from 19 July up until now, NZUSD has dropped 345 or more, or 411 pips since July the 17th. That's a strong bearish evidence in this market. And we've got the 0.6720. Right, let me highlight the 0.7620. Put my line there. Horizontal properties. We've got the 0.6720. Right, you see where that price zone is, that area. Let's take note of that. We're going to talk about it some time in the coming days. The 6720 price zone. But now, looking at the daily chart, price broke and closed below this major support. Price broke and closed below. See here, support, support, support. But price broke and closed below, then rallied back into the, so this is now a resistance zone. So you really need to take note that the 6500 price area, the 6500 price zone is now the best potential area for you to look for shorts on NZUSD. Right, NZUSD is a potential area to look for downside movement on this asset. We are on a daily chart. I'm gonna go into a H4 chart. Right, let me just zoom out a bit. Right, I need my day here. So you can clearly see the high of last week. This is the high of last week. This is last week's high and last week's low. Now, I'm done with the days. Let me take off the days. Right. So now I'm going to mark last week's high. Remember I mentioned 6500 is a potential is the best potential area to look for shorts in the market. So now I'm going to highlight last week's high, and then we've got last week's low here. Then I'm gonna take my fibs. Let me remove this one here. I'm gonna take my Fibonacci 2 swing high of last week to the swing low. Now look where our optimum trade entry is, 65260. This is our optimum trade entry. 62% is right at 650.76. That's another potential area to look for short trades. So NZUSD 6526 or 650 price zones are good potential area for short trades. So we will be monitoring the price action, and I expect you to highlight these prices on your core level up so that you don't miss when the price hits that target. So that's much about it on NZUSD. We've got the 6526 price zone, we've got the 6500 for potential bearish evidence to continue in this asset. So now we are going to look at NZJPY. NZJPY, we've got a market which has been strong bearish. We've got a strong bearish market on NZJPY. Oh, and one thing to take note of, guys, when it comes to NZUSD. Last week, the Royal Bank of New Zealand lowered the interest rates to 1%. And it's because of this reason that in the coming week, I'm only focusing on potential bearish evidence on this asset here, which is NZUSD. Last week, the Royal Bank of New Zealand lowered interest rates to 1%, and this in turn is the main reason why we are going to be looking for bearish evidence on this asset here, the NZUSD, sorry. So take note of that. That's where this analysis is derived from. Now let's look at NZJPY. NZJPY, we've got this is a weekly chart on NZJPY. The 69.20 price level is a strong area which is just been broken last week. Price broke through and closed below. Right, so let me get rid of this. I like clean charts. Right, NZJPY price broke through a strong area of support. So now this area is now resistance. So 69.12. Okay, I'm gonna highlight this, and the closest institutional price level here is 69.20. There we go. So now the 69.20 on NZDJPY, the 69.20 on NZDJPY represents a good area for us to look for short trades. So I'm expecting market to correct a bit before another plunge to the downside. So I'm expecting market to correct into 69.20 in this area. Now this is where we are going to be looking for short trades to the downside. So now that I've highlighted my strong area of interest, which is 69.20, I'm gonna go onto a daily chart. There we go. You can see the 69.20, this area here, it did face some resistance the first time it hit 69.20, but the bulls couldn't hold much stronger. So now I'm expecting another push into the 69.20 before markets rally down to the downside. So now you can see we've got this high here, the high of 6 August. Then we've got the low, which came on 7 August. So that's last week's high and last week's low. So now I'm gonna put my line 2 there. Then I'm gonna put the other one there. Let me just change the color for interest sake so that we can see clearly. So I'm gonna make this red, and I'm gonna make the resistance line. Can I put? We put blue. Right, so we've got the blue, which represents our last week's high. Then we've got the red that represents our last week's low. Now I'm gonna go to an H4 chart. Remember, our 69.20 is still there. That's our area for bearish trades. So now I'm gonna, oh sorry, now I need to, let me get rid of the 69.20 before I put the fibs. Let me get rid of the 69.20 before I put the fib 2. Right, so now I need to measure where I'm going to expect market to correct to, so that I look for retracements areas to look for short trades. Market cannot just drop and all the way to the downside. There has to be retracements, there has to be corrections, you see. So now last week's high, last week's low, 69.30 represents our OTE, optimum trade entry. So 69.30 on NZJPY, 69.30, that's a good area for short trades. 69.10 also is a great area to look for short trades. Targets and stop losses, this will be highlighted in the mentorship group once we have entered the asset. So I'm expecting a correction or retracement to 69.30, or retracement or correction to the 69.10. Then this is the trade that we are gonna take. You see, that's the trade that we are going to take, because it represents a better chance on our side as traders to yield better results, rather than saying, okay, since you're expecting a retracement, Ivan, can I trade it to the upside? No, that's not how we trade. That's going against our plan of action. So now that's much about it with the regarding NZJPY. I'm not going to change these charts, guys. Remember, NZUSD, they almost have the same look-alike pattern. So now I'm going to look at EURJPY. I'm on the weekly chart, EURJPY. Now, Euro has also been bearish. Price hit the strong area of support here, then bounced up. But if you look at last week's trading action, if you look at the price action of this candle here, let me grab my arrow 2. If you look at the price action of this candle here, what does that tell you in regards to the market? Wherever you are, what does that tell you? Try to answer yourself. What does that price action tell you? Bulls tried to push price up, right? But they couldn't hold any further high. And prior to market close, the bears came back into the picture. Where did those bears come from? Right? Look at previous week. Look at the previous week, which is this strong bearish candle. I always emphasize to the new students, the old members of the mentorship group, the size of the candle matters. It tells you who is in control of the market. Right? So now, I'm going to highlight last week's high. I'm going to highlight last week's highest price point, which is up here. And then last week's lowest point came at our support level. Now I'm gonna change the color for this guy here. Let me make him red. Let me make him red, and we go okay. So now that was the range from last week's price action, which we have correctly defined that the bears are in control of this market. The bears are in control. So now I'm gonna go to a daily chart. Right now I'm on the daily chart. Now you can clearly see we've got our high coming in at about 119.90. See, that's our high. Then we've got our low coming in at 117.65. Now I'm gonna place my fibs. I'm gonna place my fib from the high to the low. Right. So look at 119.20. Write down 119.20. That's the potential price zone that we need to look at for short trades. EURJPY short trades from 1190.20. That's the great area for looking for short trades. The 119 area also is a great area for short trades. Now let me go to a H4 chart so that you can see clearly. Now this is the chart with the high to the low. We've got our swing high, swing low. Price did rally up, no, rally from the upside. Last week's open, where's our last week's open? Right, there we go. So that was last week's low, the one that came in here just soon after market opened last week. We had our low of last week here. Now this is the low of August, the high of August so far. So now I'm expecting market to correct back into 119 area. This is an area where we look for short trades to the downside. So take note of 119.20 and 119 as potential area to take the market to the downside. And finally, we are going to look at AUDUSD, one of my favorite pairs. AUDUSD. Right, let me put my institutional price zones there. Right, AUDUSD, you can clearly see this market is strong bullish to the downside. AUDUSD, if price breaks above where am I? Let me go to a daily chart. If price breaks above the 6835, 6835, right, let me highlight 6835. We are almost done, guys. We are almost done now. 6835, there we go. 6835 represents two opportunities on this asset, but I'll definitely say more to the downside. If price rallies up all the way to 6835, this is a great area for short. It's a great area to look for short trades. Reason being that it's now support that has turned into resistance, 6835 area. There's also a new supply that was created. Remember, supply zone is only created when market is rallying to the downside. There's supply here. You see, this is also supply. Market rallied. When price came back again, market dropped. So now I'm expecting price to come back here, or when price does come back to 6835, I'm expecting another push to the downside. So 6835 is our best price point to look for short trades. So we have discussed the dollar. I have discussed EURUSD, gold, NZDUSD, NZJPY, EURJPY, and finally, lastly, we did AUDUSD. That's a lot of pairs, guys, that I've covered this week. Normally it's like 4, 5, 3, but this week I covered 1, 2, 3, 4, 5, 6, 7 assets that I have covered. And if you find yourself not coming out with at least 80 to 100 pips in the coming week from these assets, then get in touch with me so that we can really see what's the issue. At least 80 pips from my mentorship group, guys. You should be in a position to harvest at least 80 pips. So it can be a maximum of 200 to 300 pips. You will see what we're gonna do in the coming week. And yes, guys, that's much about it. This has been one of the longest weekly review that I've done so far. It's almost coming to an hour now, and I've covered quite a lot of information. Hopefully we've got a great trading week. Like the past 2-3 weeks, our trading in the group has been going on very well. I'm sure you can all testify. And as for the new guys, the one in the beginners group, do not worry, guys, if some of this jumbo language doesn't make sense, but I'm sure by now, little by little, you are now understanding what we are talking about, and it's only a matter of time you'll be understanding exactly what we are talking about. And I'm going to be in touch with the new guys in your group so that we can discuss the upcoming week. I'm not sure if I'll be able to have a class in the coming week, but I'll confirm. But Zoom sessions, we are definitely gonna have one on Tuesday. So yeah, that's pretty much about it for the upcoming week, guys. And thank you for watching this week's edition of the review. If you have any questions or comment right below. If you want to get updates from me and you have not subscribed yet, consider subscribing, guys, and make sure you've got that bell icon ticked so that you always get a notification in your mailbox when I've uploaded the weekly review or any other tutorials that I normally do during the week. So thank you guys for watching, and happy trading to everyone. Cheers.